Hello dear viewers, welcome back to my YouTube channel. This is me, Sameem Habibi, and in this clip, as you're watching on the screen, I'm going to be briefly talking about government's two economic policies, the fiscal policy versus the monetary policy. And I'm going to be trying my best to make them as much as succinct and concise as possible. So first, let's have a definition of these two tools. So the fiscal policy and the monetary policy are indeed two tools that governments use in order to help the economy stay on track. The governments indeed invoke these two policies in order to stay the economy in track. So how? For example, let's come to the fiscal policy. Through the fiscal policy, the government indeed cuts taxes. When we say taxes, the taxes, for example, on top of them, the corporate tax and the income tax, and there are so many other types of tax as well. So in that case, people and companies will pay less to the governments, and thus they will have a lot of money to spend. And the other way is through the fiscal policy, the government actually increases its spendings. When we say government spendings, there are a lot of sectors actually, namely the education sector, health sector, and public transportation, military, and so many other parts. So once the government increases its spending, so that also means that people and companies will have a lot of money to spend, and these two approaches will indeed lead to money circulation within the economic cycle, and thus the economy will grow faster. So on the other hand, the monetary policy is all about the decisions being made by the central banks or Federal Reserve System, which is actually a lot of countries use that term, for example, the USA. So what this basically is, central banks do is they lower the interest rates. And what does this means? Lowering interest rates means that loans are cheaper for people and companies to borrow. So people and companies will borrow a lot of money, a lot of loans, and use that amount of loans to invest. So in that scenario, the people and companies will have a lot of money to invest, and which will basically lead to money circulation within the economic cycle, same as the fiscal policy, but in a different approaches, in a different way. So in this scenario as well, the economy will grow faster. So this was the basic and a very essence of these two economic policies for governments in order to invoke or use when they wanna help the economy stay on track. Thank you for watching, and if you're interested in similar topics, for example, related to finance, to business as a whole, economics and e-commerce, please follow me on my Instagram and subscribe to my YouTube channel and add me on Facebook, and I'm gonna share my details at the end of this clip. Thank you very much for watching, and make sure to share this with your friends and colleagues, particularly to those who are interested in, and stay blessed. Bye bye.